When we consider the round of earnings we've had from several miners, I want to get your outlook on the overall base metals picture. Where are we headed this year?
Well, it's had two fantastic years in terms of price performance across the sector. In 2016, we were up about 20%. If we look at the LME metals index as a broad measure of the market, in 2017, 30%. And we've started this year steady. The recent sell-off in equity markets caused metals to fall, naturally, but the bounce was very quickly bought into. And we're looking at a stable to slowly rising price outlook for this year. We're bullish. If we look at the five main metals, we're bullish all of them on a short-term basis. Very mindful of the positioning. The speculative length is extreme still in some of them. And then as we move into the medium, longer term, there's some differentiation that starts to creep in.
You say speculative positioning is extreme in some of them. Which ones are you watching?
Well, right now it's nickel. Nickel is right up there with an extremely high level of speculative interest. We recently had aluminium and copper to a certain degree, right up in that extreme sort of positioning profile. A lot of the interest came into aluminium as a function of the excess supply cutbacks in China that attracted a lot of interest. The price did very well. Speculators made a lot of money out of it. Same with copper. That's relaxed a little bit. But at the moment, it's nickel we need to watch. And we're bullish nickel, even from these levels. But really, the positioning dynamic helps us understand, and tracking positioning really helps us and our clients time entry points into these metals, because it's really buying on dips that adds the value.
What about the supply fundamentals with copper? Do you see that changing in the near term?
Copper's very interesting. We have a year ahead of us where we have 20 supply deals to be renegotiated, roughly 25% of the world's copper supply coming out of South America. And as we've seen a little bit last year with the strikes at Escondida, Cerro Verde, it had a meaningful impact on price. So we've got 20 this year. With a high copper price, the risk of supply outages and disruptions is obviously that much higher. So that's very much on our radar screen. We have a 6,900 price target for copper for the end of this year. We're a little bit ahead of that because of the speculative interest at the moment. But the outage risk is a meaningful upside risk in our view.